Crypto is currently holding up in one of the most uncertain macroeconomic environments we've seen in months. Bitcoin is still holding around about 70k, Ethereum is stable, and altcoins seem to be waking up somewhat. But here's the real story. Global tensions are rising, market prices are uncertain, and yet crypto isn't breaking down too much at the moment. So today we're breaking down why crypto is staying resilient despite geopolitical stress, the hidden macro forces driving Bitcoin right now, what institutions are doing behind the scenes, and how altcoins like Dogecoin and XRP fit into this picture. Because what's happening right now could define the next phase of the crypto markets. Over the last 48 hours, Bitcoin has done something very interesting. It didn't panic too much. Despite rising geopolitical tensions and uncertainty across global markets, Bitcoin has continued to hold around that 70k level, showing relative strength compared to how it's been dropping recently. According to recent market coverage, Bitcoin's stability is being supported by renewed ETF inflows, with demand from firms like BlackRock continuing to act as a price floor. Analysts cited in market reports describe this as a relief bounce supported by institutional flows, even as traditional markets remain cautious. But here's where things get quite interesting, because normally during periods of geopolitical stress, equities become volatile, liquidity tightens, and risk assets like Bitcoin or gold sell off. Crypto used to follow this pattern, but now Bitcoin is starting to behave quite differently. Some analysts suggest Bitcoin is beginning to act more like a normal, neutral reserve asset similar to gold, especially as concerns around currency stability and global tensions rise. And that's a big shift. The current structure that we're looking at is support at around that $68,000 level and resistance at about 75k. And if Bitcoin continues holding this range despite macro pressure, it could signal underlying strength that hasn't fully been priced in yet. And while Bitcoin is holding steady, the real signals are coming from altcoins. Now here's where things start to get even more interesting, because despite global uncertainty, risk appetite is quietly returning. Dogecoin is the clearest example of this. Over the past week, and still elevated over the last 48 hours, Dogecoin has seen a 176% surge in active addresses, alongside rising volume and increased derivatives activity. That's not defensive behavior, that's speculative positioning. And historically, Dogecoin plays a very specific role in the market cycle. It's a risk-on indicator. When Doge activity rises, it often signals that retail traders are re-entering the market, liquidity is rotating into higher risk assets, and sentiment is tending to improve. Right now, price is sitting just below the key 10-cent resistance level, which is a very, very juicy level to be buying at, if you don't mind me saying so, because I am buying at these current levels. And markets are watching quite closely, I think, because if that level breaks, momentum could accelerate very quickly to the upside. But here's the contradiction. On the one hand, geopolitical uncertainty should suppress risk-taking. On the other hand, Dogecoin is suggesting the opposite. So what's actually going on? To understand this, you need to look at what institutions are doing. Over the last 48 hours, ETF flows data suggests that capital is still heavily concentrated in Bitcoin and Ethereum. Funds tied to BlackRock and other major asset managers continue to dominate inflows, reinforcing Bitcoin as the primary institutional hedge. Meanwhile, Ethereum is holding around the $2,200 mark, supported by growing demand for staking-based investment products. And this tells us something pretty important. Institutions are treating crypto, especially Bitcoin, as a macro hedge, not just as a speculative asset. In times of uncertainty, capital tends to flow into US Treasuries, gold, and cash. But increasingly, Bitcoin is entering this conversation. At the same time, institutions are still cautious with altcoins. Exposure to assets like Solana and XRP exists, but they're very limited in comparison. Analysts describe this as a barbell strategy. Bitcoin is safety and hedging, and then selected altcoins are the upside and growth. And that explains the divergence that we're seeing. Now let's talk about XRP, because this is where geopolitics and crypto start to overlap in a very real way. Recent data shows that XRP ledger transactions have surged significantly, with active levels far above historical averages. But the bigger story is happening in Europe. Financial institutions are exploring blockchain infrastructure for tokenized assets and collateral systems, partly driven by the need for more efficient and resilient financial infrastructure. And here is the key point. Geopolitical uncertainty is accelerating this trend, because when global systems face stress, there's a push to modernize, to digitize, to create more flexible financial rails. And that's where blockchain comes in. If XRP ledger technology becomes part of that infrastructure, it could benefit directly from this shift. So whilst Dogecoin reflects retail sentiment, XRP reflects institutional infrastructure development, and both are moving at the same time. So let's zoom out and look at why all of this is happening now. It comes down to three macro forces. Markets are still trying to price in future interest rate decisions. Conflicts and stability in the Middle East, specifically in Iran, are increasing demand for neutral assets, and institutions are actively exploring blockchain as part of the next generation financial system. And here are the key insights. Crypto sits at the intersection of all three. It benefits from liquidity expansion, it acts as a hedge during instability, and it represents the future of finance and infrastructure. And that's why we're seeing this unusual dynamic. Bitcoin holding strong, Ethereum attracting some capital, and altcoins showing some early movement despite the uncertainty that we are seeing. Some analysts even suggest crypto may be entering a phase of partial decoupling from traditional markets, which we've obviously seen before, driven by internal demand rather than external conditions. And if that's true, this could be the early stage of another major shift. So what does the last 48 hours actually tell us? Three things in my opinion. Bitcoin is acting stronger than expected, holding above 73k despite macro pressure in a bullish. Number one, Bitcoin is acting stronger than expected, holding above 70k despite macro pressure is a bullish signal. Number two is that risk appetite is quietly returning. Dogecoin activity suggests retail is coming back. And number three, infrastructure narratives are growing. XRP and tokenization point towards long-term adoption trends. This combination is pretty rare, and it usually appears during transitional phases in the market. So where does this leave all of us? Right now, the crypto market is balancing two opposing forces. We've got all the uncertainty in the world with geopolitics, bearish pressure obviously. Institutional adoption and liquidity expectations are bullish pressure, and the market is holding somewhere in between them. That's not weakness, that's compression, and compression often leads to expansion. So key levels to watch for the next few days: a Bitcoin breakout above 75k, Dogecoin breaking above 10 cents as well, and seeing whether Ethereum can hold that 2k level. If all of these can align, then we could be looking at the next leg up in the market. But if macro conditions start to worsen, expect volatility before direction. So the real question is crypto becoming a global hedge asset, or is this just a temporary resilience? Let me know what you think in the comments down below. And if you want more breakdowns like this, make sure to subscribe, because the next move could be closer than you think.